Good morning, Vietnam.
Good morning.
So we have a guest here today, so he doesn't know. I always start with a good morning, Vietnam. Tribute to our friend, rest in peace, Robin Williams.
Yes.
I'm Meyer Dalal.
Jason Mantione.
Zach Moran,
So Zach represents what company is it?
Guardian Adjusting Group, Public Adjusters and Property Damage Consultants.
So Guardian Adjustment Groups. This has been a hot topic, especially here in Florida and California with insurance, what's going on and what's happening. And we have a lot of clients. I just had a deal. Welcome to the Money Matrix, where smart money finds a smarter way. I got so excited about this. I just had a client buying a $5 million house right on the water in Miami, and the deal almost died because the insurance quote came in so high. It was insane. And ultimately, he ended up doing it because he quantified it as saying either way the Miami market's going to continue to go up, which I agree to. For him, it was just moving some decimal points over. But in reality, the craziest thing, the average property insurance in coastal areas, Miami, Fort Lauderdale, is about $15,000. That's 7 times higher than the average mortgage payment for the regular people in the United States.
Deal breaking, just like you said.
It's crazy.
Yeah.
So I'm excited to have you here. It's going to be a little bit of a free form in the way we do it. And I want you to, and Jason is also great at this because he's done so much mold remediation and insurance claims and whatnot. So you guys can both vibe off of each other. But I really want to get into it and talk about what homeowners need to understand about insurance. As lenders, we have certain requirements, and homeowners understand they have to get that, but they don't really fully understand what's involved qualifying for the payment and fitting into your debt to income ratio. Not as much on our clients because our clients make more money and we deal with self-employed, so we qualify differently. We use, for example, just for you to understand, bank statements. So we'll use their income from their business, use their gross 1099s rather than like a net number on your tax return after you write everything off. Our clients don't have as much of that thing, but it's still uncomfortable when your insurance premiums are significantly higher. We deal with a lot of foreign nationals who are coming down now and have sticker shock as it is with rates being higher than it is in Canada, but also the insurance numbers. They're like, what is this?
And what are you getting covered for within that number?
So that's what I'd like you to first break down for us. What is a public adjuster and how does it fit into the insurance market? Do you have to know so much about insurance, or is that part of your job? Tell us about that so we can understand as a homeowner wanting to know. I don't even understand all of this stuff. Like just talking for 30 minutes before you got onto here, I learned so much from the nuances that you don't pay attention to.
It's really such a industry of detail when you're dealing with homeowners insurance policies, insurance claims, and specific damages, whether that be from a hurricane, a pipe leak, a fire, or a window that's leaking from some rain. As a public adjuster, our most prominent goal is to fight for you in your homeowner's insurance claim, whether that's from the damages I just mentioned or even vandalism, depending on what your insurance policy covers.
So you are representing the homeowner.
Exactly.
And now the question is, who pays you?
The insurance company. We work on a contingency fee. Our goal is to get you as much money as possible. We benefit from that as well. We work on a fee basis from 10 to 20%. If the state is in a state of emergency right after a hurricane, our fee is only capped at 10%. Otherwise, when it's a regular homeowner's claim with unforeseen circumstances, and it's a lot trickier to work around those kind of coverages, that's when we take that extra percentage up to 20%.
When you're negotiating that, it comes from the proceeds of what the claim is. So
Exactly.
if the claim is $100,000 and you negotiate 15%, $15,000 is coming to you.
That's correct.
When you're trying to negotiate for that number, do you take into consideration what your fee is too? Because ultimately then, if that's the case, the client will be short $15,000 on their work. Is that how you guys try to do it?
Without a doubt, that's exactly how we try to do it. We want to make sure that the homeowner, as a main priority, has everything they need to take care of the damages that have happened to their home. Number one, so they can get reinsured. Number two, so it doesn't affect their line of credit when it comes to a mortgage and things of that nature. Also, when it comes time to sell the home, they want to have everything as updated as possible. So they want to use that insurance proceeds to perform the repairs and do any updates if necessary.
Yeah. And I just want to say one thing about this. So me being in the industry and doing a lot of remediation over the years dealing with insurance companies, 25 years ago, we dealt with the insurance companies, and the insurance companies were fair. There was some times where you needed a public adjuster to come in, and they came in. But I'll tell you, the past, I would say 15 years, probably a little bit more than that, I have 2 public adjusters that I always use. I do not let any of my clients deal with the insurance company directly without a public adjuster, because they are not paying out what they should pay out. The reason why I bumped in here real quick is that I want you to know that at that 10, 15, 20%, those insurance companies will come out and tell you that to the homeowner, we're giving you 50,000. And the homeowner can jump up and down and make 40 phone calls and send you, at the end of the day, we're giving you 50,000. So when the public adjuster steps in, he not only is he take care of his 10, 15, 20% fee, he's going to get them at least 50, sometimes 100% more than what the insurance company's offering. So if my client will not bring in a public, I like to bring in my guys just because I know they're honest and they're going to do the right thing. But if they don't want to use a public adjuster, I'm not even taking that claim on, because it's going to be a fight for me. I'm not going to be able to fix the house the right way, and I'm not going to nickel and dime. Your profession is so needed in this business. It goes hand in hand. Like I said, you need it on every insurance claim. I just wanted to throw that in there.
And it's not even that. These homeowners, when something does happen to their home, they're in a state of distress.
Yes.
They don't know what to do, who to call, how to file the claim, what to say
100%.
when they do file a claim. I want to say 80% of the time when a homeowner files a claim on their own, it's not filed the correct way. They're most of the time getting it put under the coverages, which it shouldn't be put under. That way they can't maximize the full settlement and potential. Exactly.
This is where it gets really interesting. We as a lender require insurance coverage. Some lenders say you have a $800,000 mortgage, you have to get $800,000 worth of coverage. And that's their end all to end all, which is obviously more expensive. We require the full replacement cost. So we get what's called an RCE, a replacement cost estimator from the insurance company, and says, in effect, this is what it would cost to replace the home. And let's just say it's $500,000. So we ask for coverage for $500,000. Can you shed some light on, is benefits, pros, cons? Is there any difference to it? And then from there, go into the different coverages, because there are a lot of times where clients will call me and say, hey, I got quotes from Citizens, for example, very common in Florida, but this person's quote is $8,000 and this person's quote is $6,000. It's from Citizens. How does that work? What's involved in that?
So the first thing I said when we got on the air was this industry is all in the details. These insurance carriers like to put things in the policy provisions, whether that be endorsements, not covering something, or having an extra high deductible to lower or increase your premiums monthly or annually. A lot of the time, what happens is it's put on the water damage coverage. They'll say that there's no water backup or sewage backup or leakage or seepage. There's no coverage for any of those. So that means when you have a dishwasher that's leaking ever so slightly for, let's say, a week or two, and then you finally start to notice in the back of the wall, the paint starts to peel, the baseboard's coming off, that insurance company will not cover that loss because it's under leakage and seepage from the dishwasher. This is why people get excited when they see these low premiums. It's just because they don't have the coverage that's actually needed on their home. That's the whole game plan when it comes to writing insurance policies and making sure you have the full coverage. So God forbid something does happen, doesn't matter the scenario, whether it's a fire, mold, a small leak, a hurricane, you want to make sure that what you're paying for, your insurance is covering everything you need.
That's why the quote varies so much.
So what are your main, if you were to say 5 main things that you would tell every homeowner, no matter what, to keep in a premium, regardless of how much extra it'll be?
One thing to keep in a premium, or nowadays it's more something to keep out of the policy. It's these managed right to repair programs. I think Citizens was the first one to implement this. When you have a loss of water damage, they cap you at only 10 grand. So your maximum payout, no matter how big or small the water damage to your home, is going to be 10 grand. And that's a sublimit of the dwelling. Now, why they do this? Because they want to bring in their own contractors to perform the repairs for you. As a homeowner, how comfortable would you be when you know your insurance company lowballs offers to everybody all the time when it comes to these claims? How would you feel about having them send in a random contractor to fix your pride and joy, your number one investment, which is your home?
It's funny you say that. I had a client when the hurricane what was it, Ian was his last
No, Milton and Helene was the last one.
The big
but
one.
Ian caused
that was 2 years ago.
they got destroyed. And I remember they had significant damage.
You talking about Mark?
Yeah.
Yeah.
And Mark, the insurance company basically told him, sorry, you're 10 grand. He had like, I don't know, how much did you quote him?
Oh, forgot
He
it.
had $180,000
Yes.
worth of damage.
Yep.
I have coverage. I pay a lot of money.
Upwards 10, 15, 20 grand. Yeah.
So basically, they told him he had $150,000 worth of damage, and they said, "Sorry, your claim's denied." And he said, "Why?" Because we can only cover you for 10.
And that's what it was. There was the fine print. He had to come out of
Fine
pocket.
print, exactly what you're talking about. Let's just say someone has that scenario. Is there a way to navigate around that?
So slowly now, with the attorneys that I've been working with, we've been trying to find ways to work around that. We haven't really found anything concrete yet. And to get an attorney involved on your homeowner's insurance case is very time consuming, and people are turned off by that. So half the time the homeowner just takes the loss, pays out of pocket, remediates any damage, and moves on with their life, rather than sitting in litigation trying to fight this out with the insurance companies, because that's the loophole essentially, is having the insurance company be in violation of their agreement with the insured, which is the homeowner. When they send a contractor as a public adjuster in the right to repair scenarios, it's our job to ensure that every single detail is going to be taken care of. And if it's not, the insurance company is going to be in violation of their contract with the insured and not performing the necessary repairs, not taking the proper precautions before the repairs are made, cleaning, protecting the floor, protecting the walls, mask and prep before paint. So during COVID, when this first came out, it was a big thing with COVID testing. We would require anybody who came into the house, whether they left for an hour, 5 minutes, or a day, they would need to be retested before they would come back into the house. That was the biggest loophole we found around that.
Unfortunately, this is what it comes down to. You had dozens of insurance companies leave the Florida market, and you're left with one, Citizens. And who's Citizens? It's
The state.
government, state insured, state backed. And when you have a state backed insurance company, this is what happens. They can do exactly what they want. How does someone fight this and can withstand going to litigation with deep pockets from the state of Florida? So how does anyone do that? Do they just lick their wounds and say, okay, I'm going to move on, and next time I'll have a better coverage policy?
So it is a learning lesson for most people when it comes to this type of situation. When you're stuck between a rock and a hard place, that's the best time for a learning lesson, to learn for the future, to prepare, to be more mindful of reading, as you said, the fine print of these insurance policies to ensure that this never happens again. Also educating your neighbors, your friends, your family. I'm in this situation. I'm stuck between not doing anything with my house or going to litigation or paying out of pocket tens of thousands of dollars for these repairs. This is a big situation and a big learning lesson for people when they're shopping for insurance policies, so they know what to ask for, know what coverages to get. God forbid next time this happens. We live in Florida. Odds are there's a hurricane every other year or so. So it's best to ensure that.
And let me ask you something. What happens when you have a scenario where insurance lapses for whatever reason? It could be just a clerical error, it could be mispayment, whatever. What happens from an insurance side? Do they get a reprieve if anything happens in between? Is there a look back if it gets reinstated or anything like that?
So there's not necessarily a look back. What would happen is if it's lapsed for long enough, you would need to have a forced place insurance policy.
That's what the servicers do. So basically, in the real world, forced placed insurance, basically the servicer who's handling your loan goes in and takes a policy, which is typically 3 to 5 times higher than the actual policy, and says, here you go. This is forced placed. Figure it out. Most people don't understand what's happening, and their payment goes from $2,200 to $3,200 or $3,000. Now it's $800 more a month that they can't afford, and they're stuck. It's a vicious cycle until they call and figure out that their insurance lapsed, so they have to get back their insurance and remove the forced placed insurance. It's a whole cycle that happens here. But if you lapse and there's a gap in between the forced placed and the lapse and there's damage,
you're stuck. There's no coverage, no policy in place at that point. So there's nothing to even recover from. If you have no forced place and you're lapsed insurance, there's nothing in place at that time where the date of loss happened. So there's nothing you can really do in that kind of situation. Also, the managed right to repair, when someone doesn't want to go to litigation, those are the two scenarios between a rock and a hard place.
I know you had mentioned something. You were asking the guru over here of insurance of the top 5 things that you would look for. I'll tell you one thing I noticed being boots on the ground. I went across for Hurricane Ian. I spent 10 months over there. My brother will tell you. And when Cape Coral, which is a middle class area, a lot of people were underinsured. And the one thing that was a problem for them is that these houses, we went in, we gutted in, we did the remediation. They didn't have enough money to put the house back together because they didn't have code upgrade in their policy.
Ordinance and law.
What that means in layman's term for our viewers out there is that basically from these houses being built in the 50s and 60s, and now there's a major renovation going to happen, everything has to be brought up to code. You can imagine the price tag on that. They don't have that in their insurance policies. From rebuilding a house, these were small homes, say $150,000 reno to a $300,000 reno, because everything needs to be brought up to code. One important thing that our viewers would need to be looking at on their policies is to make sure they have this code upgrade clause in their policy, that if codes change because if there's X amount of damage, they need to bring the whole house up to code electrical wise, and vice versa with footings and whatnot, and concrete and bulkheads if you're on the water, and all these things need to be taken into account.
When it comes to doing a renovation like that, when one thing needs to be brought up to code, you can't match it with the old stuff. So that's got to be a complete redo job.
The problem and the thing what was happening is that these houses, they were gutting them. They didn't have the money. The insurance wasn't giving them the money to put back together to redo them. So what they were doing is they were knocking them down and just selling the land.
Yeah.
It's why they were underinsured, because these are such older homes, and Florida for such a long time was an older population, owned homes for such a long time that their homes really didn't appreciate so much until after COVID. Average home appreciated 2-3%. It wasn't a huge big thing. And then all of a sudden COVID hit and you're seeing 80-100% appreciation. So they never thought, oh, I'm underinsured. The mortgage company is not going to tell you you're underinsured. The mortgage company is going to tell you enough coverage so it covers their financial interest. That's all they care about. At the end of the day, they're getting their lien protected and their money protected. And a lot of them weren't heavily financed either.
A lot of them were owned outright.
Correct. So what happened is that was another thing where underinsurance became a real big thing now because of the last 3 to 5 years, because of the home appreciation, increase in values. So when you're doing something like this, you're looking at this and saying, wow, what do I do differently? And how do I do differently? Let me ask you this. What happens? What's the process? God forbid something happens. Forget natural disaster, fire, and then we'll talk about mold separately because mold is in and of itself.
Its own animal itself.
Yeah, but like fire or water or a pipe breaks upstairs and damages. What is the process? Like if you could say, here's a 5-step action plan as a homeowner, if you have any issues, step 1, step 2, what do you do? Because your first thing is, holy shit, what am I going to do?
So first things first, make sure you have someone you trust to help in this situation. Whether that's a contractor, a public adjuster, anybody in the realm of insurance or homes can assess the damages without getting too deep into it to make sure that it's worth it for you to open up this claim with your insurance company. After you do that, you get the correct advice. Let's say there's enough damage to open up the insurance claim. There's 2 ways you can go about it. Number 1, you can open the insurance claim yourself as the homeowner. This sometimes can be problematic when you want to hire a professional, or even if you don't. Number 1, the homeowner doesn't necessarily know the terminology and how to open up the claim. There's a lot of key words such as mold, like you mentioned earlier. Mold is a very big trigger word when it comes to insurance. Also, it's been there a while. It's happened before. Those types of things are something that the insurance company is going to take into consideration when they're writing their report and say, okay, this has been going on for a while, as mentioned by the homeowner. This has been left untreated. This has been negligent. We're not going to award coverage for it.
So just the verbiage and what words they use, they'll use against you. And I'm sure they trap you into it too. They lead the conversation the way they want it to go.
Half the time, the insurance people, the people that are doing the intake of the claims at the insurance company, they have a list of questions they need to ask to do the intake of the new claim. These questions, half the time, they not trip up the homeowner, but get them to say something that isn't as beneficial to the claim as it needs to be. This is when a professional comes in. As a professional, I like to handle everything from day 1 to day 100 or however many days the claim is going to take. I like to open up the claims for my clients. This way I can ensure I know what's being said to the insurance company. I can ensure every piece of documentation that needs to be submitted is submitted, and so on and so forth. That way there's no trip ups, no mistakes. I don't have to go back and remedy something the homeowner said or go to the insurance adjuster and say the homeowner was in a time of distress. They didn't really know what was going on. As the expert and claim handler in representation of the homeowner, this is exactly how it happened. This is all of the documentation. And this is where I bring in people to mitigate the damages for the homeowner.
So step one, get someone you trust that can help you in the process. What's the next step?
Next step is to open the claim and mitigate the damages. It's highly beneficial to you if you have a professional open up the claim for you. And then the next step after you open up the claim is to mitigate the damages. What does this mean? If someone has a shower pan leak, when a shower pan leak, it's very hard to notice it right away. But once it's noticeable, it's pretty noticeable. And half the time, if it's on a second story, it's going to leak down to the first floor. Now, what happens when drywall gets wet? Drywall gets wet and it sits there. When you have wet drywall, you have a high potential for mold. And that's something we want to avoid at all costs. And that's what we're trying to mitigate when we say mitigate the water damage. So you need to call a restoration company. This is all going to be covered by the insurance company. The insurance company pay out the services rendered by the restoration company. And this is one of the 2 to 3 services that you could potentially need from a restoration company in a homeowner insurance claim. So they come in. They put these big machines. Imagine you have a hair dryer for your home, and they put that in the certain areas where there's a wet wall on the ceiling or on the wall or baseboard.
To dry everything out.
To dry everything out. And they also put dehumidifiers. So this actually extracts the moisture from behind the wall from the air and secretes it into a garbage can or to the outside, and the water flows out of the machine. So these are the 2 essential machines that are needed right after water damage. Of course, after you remedy the leak, whether it's don't stop using the shower, or if it's a pipe, you fix the pipe, so on and so forth. You need to make sure the water has stopped and there's no more leak. Once you mitigate the damages, most likely an insurance adjuster is going to want to come out to inspect the damaged property. Fortunately and unfortunately, the insurance reserve the right to inspect the damaged property, meaning there's no fast way about this. There's no 1, 2, 3, let me fix everything up and then file the claim. Everything needs to be open for the insurance company to inspect and for your public adjuster to show the insurance company and the adjuster this is the extent of the damages to its entirety.
Take pictures of everything.
Documentation, videos. I use specific tools. It's an infrared camera which can see the moisture behind the walls. This is all submitted within my report. I show the homeowner. This is an area of concern. That's an area of concern. This is where the water spread to. With the expertise and all of this documentation, the insurance company have nowhere to say no.
One of my friends just went through this exact scenario, and the insurance company denied him. They denied the mold claim. They said you have water damage, but made him wait 3, 4, 5 days before the inspector or the adjuster came out, whatever it is. And then he's like, yeah, this is an existing mold situation because you had water leaking and this was your negligence. He's no, it's because the water came down. You made me wait. It's 95 degrees. What do you expect to happen? He got mold damage because of the insurance company and they denied him.
Yep. That's the importance of mitigating the damages. The second you see something, you want to bring someone out as soon as possible. Time is of the essence when it comes to insurance claims.
So let me ask you this. If you don't have someone like yourself write the report, take the pictures, and do all of the documentation, and you do it yourself, is your data, your information not taken into consideration because you're the homeowner? And the only way they would consider it is from a third party?
I like to give everybody the benefit of the doubt. I don't like to think that the insurance company is going to treat anybody differently. I do hope that the insurance company does what they're obligated to do and pay out the homeowner as needed. Unfortunately, it's not what we've been seeing in the past however many years of insurance companies dealing with these types of scenarios, especially in the South Florida area. It's really in their best interest to hire somebody professional, an expert, doesn't matter who it is, could be an attorney, a public adjuster, a contractor, just someone to help them through this scenario so they can maximize the potential of it.
Bottom line, if you as a homeowner take your pictures, have your documentation, the insurance company is going to say not a go unless you have a professional.
They'll say it's a go. They'll delay it. They won't answer phone calls as timely. They'll tell you to get different quotes from contractors. They'll just run you around because everybody's busy and they're hoping that you're going to forget the 3 Ds.
And just have the money to come out and just pay for it and do that.
Exactly. You have the 3 Ds: delay, deny, and devalue.
Yeah, you're right. 100%.
The 3 Ds of insurance companies, unfortunately.
One thing they're going to do is have you, as the homeowner, you're going to rely on their adjuster to come out. They're going to say, okay, we're sending our adjuster out. You'll get a phone call in the next 24 hours. They're going to come out and tell you, this is going to come out, that's going to go back. It was the homeowner. If you don't know anything, you're relying on the insurance company's adjuster.
So now here's the next segment. You have an underpaid claim, and what does the homeowner do if they don't have the cash?
If they don't have the cash and it's an underpaid claim, they need to hook themselves up with a public adjuster to be able to estimate the full value, because it could be that they think that they deserve more on the claim, or that the insurance company really did underpay the claim, which is 99%
Let's
of the time.
just say they can't get that. There's no more money coming out. What are their options?
Either number one, depends on the loss. They could go after the person that caused it, whether it's from a leak upstairs, whether they live in a building, if it was a building pipe. If it's just their house and the insurance company is underpaying them, they need to go to a lawsuit with them. If they're not hiring a public adjuster, they're not having a contractor, and even with the public adjuster, sometimes we're very limited when it comes to these insurance companies. We used to have the hammer by threatening litigation, and now unfortunately
No lawyers on staff. So where I was leading to this is because unfortunately you see this a lot, especially after hurricanes. The homeowners call us, like Mark Braun said, Meyer, I want to refinance the house. I can't refinance the house because the home's damaged. He ended up having to get hard money at a 15% rate to borrow the money to fix the house. Once your home is considered a damaged home, like in a hurricane zone or whatever, flood zone, it's like wearing a black eye. And he didn't want to move into it because I don't want to ever go through that again. He wanted to sell it. And it's such a hard time selling it because the negative connotation to where it was and where it is. And it really became a big point of contention where he actually ended up almost getting divorced from it because of the pressure and everything around it. It was very hard, and he had no choice. His only route was to get hard money. Some people just give up, like Jason said. They either sell, or in that case, a lot of them had equity in the home, so it's not a big deal for them. They didn't have to worry so much, but not everyone has that luxury.
Nowadays, when you want to sell your home, where are you going to go? Everything's the same, especially in the Florida market. You sell for one price, but you're not necessarily going to find something for the same price. You might need to put a little bit more on top of it. A lot of people are really trying to stay and lock in where they're at, if they've got good rates, if they've got a good price on the house, or if it's a good up and coming area, and be able to preserve that environment for as long as possible.
I want to just wrap this up by saying, what do you think from just an overall? I know get a public adjuster, you've drilled that into our head, or someone to help you. But outside of that, what would you suggest for people that are looking to a home, investment property or whatever, and also people who own a home? What do you think they should do? What advice would you give them right now just to make sure that they're safe and that their investment is safe?
Number one piece of advice is make sure your roof, especially when it comes to hurricane season, is within the 10 to 25 years, depending on the age of the roof. Some of these roofs were put on in the 1950s, 60s, 70s, 80s, 90s even, and even the beginning 2000s. If someone put a roof on in 2002, 2001, this is their last year, coming up their last year of life expectancy on the roof. When we have hurricane season and there's no life expectancy left on the roof, that roof is not going to be covered. A roof nowadays is going to cost an average home, let's say a 24 to 30 square roof. It's going to cost someone around 45 to 55 grand. That's why it's very important to have that updated. Also, you can get discounts on your insurance rates if you have an updated roof.
So what happens if you're stuck and you can't afford a new roof and your life expectancy on the roof is about to run out? What do you do?
Get solar.
Exactly.
Most of these solar companies actually give you a roof if you sign up with them.
They'll pay off your roof. They'll lower your electric bill. There's a lot of benefits, especially going with these solar companies to get the insurance that you need. They carry their own insurance policies on the solar panels. So it's nothing to do with the homeowner. The solar panels are insured by the solar company itself.
What about after the roof? What else to look for?
After the roof, you got to make sure cast iron pipes. The 60s and 70s, the homes in South Florida, especially in the west of Florida, the west side of the East Coast, not actually the West Coast, they're built with a lot of cast iron pipes. The life expectancy of those cast iron pipes have been gone for about 5 years, if not really coming up any day now. Cast iron pipes are corroding every day. I had a lady right now, she had a hole inside the pipe under the ground, the size of a football. The entire pipe collapsed. She had to drill underneath the ground to replace the entire cast iron, had to put in a new PVC, had holes inside the home where the shower was in order to reroute the pipe from the exterior, so it was a complete mess. Cast iron pipes and roof are the biggest things to look out for.
I have a situation in my backyard where we had to drill and cut off the circulation and reroute all the piping because we had the hole underneath my pool.
The gas line.
Yeah. Was that cast iron?
No, that wasn't cast iron. That was galvanized. That was
Galvanized metal.
Yeah, that was galvanized for gas line. Yeah, he had the leak under the pool. We ended up doing with a flex.
I had to literally shut down the whole gas line and have them come reroute. They had to dig out my whole backyard and that to go through. It was crazy.
Wow.
Okay, so roof, cast iron. What else?
Flood zones. Flood zone are a big thing. I'll give an example of a client that I dealt with the last flood we had. I think it was April of 23 or 24. It was a major flood by the water in Hollywood.
Remember.
This lady had a house and it was, if I remember correctly, 5 steps to the front door, from the ground level to the front door. In her insurance policy, it only mentioned that she had 3 steps. She mentioned in the policy that she had 5 steps. I'm sorry, but she only had 3 steps. Now, as the lower you are and the closer to the ground you are in a flood zone, the higher your premiums are going to be. So I was handling this claim for this lady. The insurance adjuster calls me and said, listen, your client needs to back pay all of these premiums for the more expensive rate because their steps were lower and it was closer to the ground and they were more at risk before we pay $1 on this. It ended up being 21, 22 grand that they had to pay out of pocket in back payment just for this flood policy. It was a very nice house in the area. The price made sense more or less on what they had to back pay. In order for them to pay out the claim, they needed to have the valid insurance policy in making sure that it stated exactly how the house was, whether it was 3 steps or 5 steps. It needed to match what was in the policy.
Talk about putting the client their back against the wall.
That's crazy.
Wow.
That's something that we require. We run a flood certification to see whether any home is in a flood zone. So we require that. And then some of the flood premiums that we're seeing is also pretty crazy too. And you know what's crazy? I have a couple of properties in one development where one is on one side of the street and the other's on the other side of the street, and there's like a street in between us.
One's a flood zone, one is.
It makes me crazy.
It'll be a next door house, one house next to each other. One's a flood zone, one isn't. There's a whole science behind how they calculate the flood zone, how they did the surveys of the land, and how they can see through the weather where the rain accumulates the most. You could have a house next to one that sits 7 feet higher than the one next to it. This one's not ever going to get flooded 7 feet higher than this one. All the water is just going to go down to that house. So there's a very specific way to know who is required to carry this specific flood insurance.
I have a client right now. We're doing her refinance. Her home's right on the water in Miami, and she's on a 9-foot elevation. So she doesn't require flood insurance. Somehow that her home's on a 9-foot elevation. All of the other houses are like $25,000 premiums. She's not paying a penny.
Wow.
It's the craziest thing.
It's like you go to the Keys or even the West Coast, you see all these houses on the water on stilts. They're 10, 11 feet suspended in the air from these wooden poles or whatever.
Yep, they're all posted.
Thank you so much. How do we get in
guys.
touch with you if anyone needs to contact
my
you?
Instagram, Guardian Adjusting on Instagram. My email is guardianadjustinggroup@gmail.com. Feel free to consult with me on any advice that's needed, whether it's through policies, evaluating what your damage is worth. I'm available for any free consultations. Just reach out to me through my website, guardianpublicadjusting.com. Thank
If you
you
guys have any questions, we can definitely put you in touch with Zach. And it was awesome. Thank you so
It was
much,
amazing.
really.
Thank you,
Thanks,
guys.
Zach.
Thank you.